All right, everybody. Hey, welcome to the Note Nation Top 42. We're honored to have you guys all join us tonight to discuss the future and current status of the Las Vegas market. There's a lot of opportunities available in such a crazy world, and we'll be talking about a lot of things. But once again, thank you guys for joining us on the Note Nation Top 42. Excited to be here tonight. Encourage you all to ask questions. Whether you're watching this live with me or watching a replay of this, feel free to type in the questions. We'll be sure to get back to you, if not relatively quickly for you. But once again, thank you for joining us here as the Note Nation Top 40 continues to roll across the United States. We picked the top 40 markets and are focusing on each market throughout the month of July and into August. So once again, excited to be in Las Vegas, Nevada. Obviously, guys, we got a lot of people joining us. We have a variety of local and national investors that are keeping their eye on the Las Vegas market. We'll be discussing the different statistics and the numbers that's going on and future numbers coming to the market as well that you got to keep an eye out for. We'll talk about the second half outlook of 2020, and we'll also dive into the future opportunities that exist now in the near future for everybody. We'll also discuss where to look for those deals and how to get started finding deals immediately for your own business or other people's money. So once again, everybody, our mission is to help investors to accomplish their dreams and increase their wealth through debt investing. We've been buying and selling debt for over a dozen years at WeCloseNotes.com and bought a lot of stuff and really created a lot of win-win scenarios. What's going on right now has a lot of feel like what happened over a decade ago, and there was a lot of wealth transferred over the last 12 years. There's a lot of wealth transferred during the RTC days in the late 80s. We're going to see a lot of wealth transfer, and it's up to you if you want to take advantage of what's going on in the market, not only to help people, but also help yourself out as well. So if you don't know who I am, I'm Scott Carson. Hey, I've been an active real estate investor since 2002. I've over 16 years in the mortgage and finance and debt markets. Bought and sold a lot of debt, over $500 million in debt for my own investment portfolio, and probably another $1 billion for other investors. I'm the CEO of WeCloseNotes.com and the host of the podcast, The Note Closer Show. You can listen to it anywhere you listen to podcasts. We're nationally syndicated across the country as well, in the Las Vegas market as well, too. I've been teaching and working with real estate investors since 2004 and helping them identify different distressed opportunities in the market, whether it's notes, foreclosures, short sales, commercial residential debt. We've bought it all and done a lot of amazing stuff with it. But anyway, I invest all across the country, even though Austin, Texas is home for me. So like many, I've been bottled up for the last couple of months. And what I decided to do with everything hitting the fan is last time I sold everything in Austin, Texas, and I went what I thought would be a 30-week tour, turned into 4.5 years of nonstop travel, working with investors like yourselves, and decided, well, since I can't travel this time, we're going to do it virtually. So hence the Note Nation Top 42. But anyway, why am I doing this? Because of a couple things. One, first and foremost, I love helping investors. It is something that I really love doing, whether it's residential, commercial, passive, active. I have a passion for helping investors to find amazing deals, and we've found a lot recently that could be some phenomenal deals, and we're going to continue to see a wave of deals hitting the market too. I also love helping people solve problems. There's a lot of people out there that are struggling right now that have issues. We all need to come together, especially the real estate investors out there, to really kind of do a lot of good and solve a lot of the problems out there. I do believe that's what's going on right now is an amazing opportunity. If you've been in the market for a little while, you missed out on the Great Recession of 2008, 2012. One of the biggest things I hear people say, oh, I missed out. Well, now's your opportunity to dive in. If you can learn from what you missed out back then, or learn what you went through back then and understand the opportunities, then you'll agree with me that right now through the end of the year and into 2021, we've got an amazing amount of opportunity. And I was also doing this because I was once a distressed borrower. People don't know the options. There's still a tremendous amount of people out there that don't have a clue what's going on, don't understand their options. And I'm glad to help out people in any form or fashion, because there is nothing greater in life better to do than to help someone overcome an obstacle or achieve a goal or dream that they thought was impossible. There's a lot of investors out there but struggling. There's a lot of people out there struggling right now that goal and dream of owning a house is now kind of an albatross. It's kind of in a bad situation with them being out of work and not being able to pay the bills that they don't know what to do. And we're here to help. And along the way, we really would love it if we could hit our goal of hitting 1,000, creating 1,000 note investors, helping them to close on their first deal here in the next 12 months. We've done it before. and we're looking forward to doing it again here between now and then the end of the year. So let's dive into it. Where are the opportunities, everybody? Where should you be looking? Well, they're everywhere, okay? I don't care what kind of asset class or what stuff you're interested in, whether it's single-family homes, self-storage, apartment buildings, mobile home parks, office building, commercial spots, hotels, motels. There are opportunities everywhere. And the beautiful thing, it doesn't matter. It doesn't matter what your experience is, what your skin color is, how old you are, how old you are, whether you're a business owner or a non-business owner. If you want to really make a name and do some amazing things, now's the time to be taking action and be doing a whole lot better versus being curled up and rocking in a fetal position like, oh, woe is me. Well, woe is you if you don't take action on what's available. There's always money made in up and down market, and it's time for us to make some lemonade out of lemons, everybody, because we all know what's going to happen and what's already hitting out there. And we know Vegas already has its fair share of issues out there. So what do the national numbers say? Let's start with those. 11.1% unemployment rate in June. That number may have gotten a little bit better in July. It's hard to tell with some states having to reinforce the restrictions, like here in Texas, Florida. As cases spike of the pandemic, it's a very thing. But 1 out of 9 people are unemployed on the national level. Over 40 million people are collecting unemployment of some sort. They expect over half of the small businesses are expected to fail, and that number is going to get worse the longer this goes on. The sad thing is most people don't realize, though, that before everything happened in March, 1 out of 10 borrowers, 1 out of 10, were already 30 days behind their mortgage. We're already struggling to keep up with their mortgage payments. That's before this all happened, and it's gotten obviously a whole lot worse because the national default rate, that means people are at least 90 days behind, is 7.76%. February into March, it was roughly 2.6. Well, that number has roughly tripled in the last few months. Now, is it going to get worse? Yes, it's going to get worse. You're going to see that number spike probably above 8, if not 9% here when the numbers come out for July is what my expectations are. There are currently 4.1 million Americans currently in default. That's right. 4 million Americans are already 90 days or greater behind in their mortgage, and that number is going to get worse. And if you think about this, we're into this thing less than 6 months. Well, back in 2008, it took us 18 months to get to 1.6 million defaults. All right, we're already 2.5 times that in a third of the time. That's why I believe it's going to get a lot worse. We had 15 million homeowners underwater back at the peak in 2010. We may very well see that number again. And that's actually, we'll get to that in a second. But the delinquencies are across the board. It's just not the non-prime stuff, as I like to say. Even though we took a big hit with that 21.8% increase in defaults in June on the non-prime side, that's what they call the subprime. That's your FHA mortgages. That's your people that don't have great credit, the Alt-A programs, not your traditional 30-year fixed aspect of things. Prime loans, though, did take a hit, 12% increase in defaults across there. Reperforming loans had a 6.4% increase in their defaults. And, of course, whole prime loan delinquencies also rose 5.5%. They're expecting, and this is not from 12 years ago, they're expecting us to see 15 million mortgage defaults. All right. Now, the thing that cracks me up is in this article, I looked down here and just saw this. Getting high with strangers on Zoom didn't sound like fun, but then I did it. There's a lot of people that they're scared shitless, and that's all they got to do is get drunk or get high because they don't know what to do. Okay. We're going to see a lot of this happen again, and it's going to be an ugly, ugly time for a lot of people. Now, looking at the unemployment rate, let's dive into what's going on in the Las Vegas market right now. I'm sorry to say this, folks, but Las Vegas is one of the highest unemployment markets in the country at 29%. Now, that's an improvement over April of 34. Now, obviously, some of the places have gone back to work in Vegas. Some of the places have opened, other things like that. So that number may be down to 25% or a little bit better, maybe below 25%, but it's still a rough time right now. I'm sorry, it is dropped down to 25.3. The June numbers just came out. Sorry, I forgot I did this earlier. So it did drop down to 25.3%, but still one of the highest unemployment rates in the country is in Vegas, all because we know such a bunch of the economy is based on tourism, hotels, the casinos, travel. We know that people aren't going out. They're not traveling. They're not leaving their homes. They're not going for entertainment because they're bundled up inside. We get that. I don't think Vegas is going to recover anytime soon. Now, if you look at the foreclosure trends, this is from Realty Track. The numbers, the foreclosure numbers would say otherwise. All right. Only basically 1 out of every 21,000 homes are in foreclosure in Vegas. Basically, 1 every 14,000 in the zip code 89107 and 891,200. Ridiculously amount of low foreclosure rate in Sin City. We know that. Obviously, it's down a little bit over the month in previous months with bank-owned stuff. Obviously, you can see the numbers fall off the cliff from pre-foreclosure auctions. All came to basically a stall in April, May, and still through June. Numbers, obviously, for foreclosure activity is way down, obviously, because stuff has been delayed. All right. Now, looking at kind of the country, Black Knight is a huge company out there that tracks stuff. So we saw a big hit, highest level defaults in May, 20% increase across the board. June is a little bit better. The thing that's scary is that you see a 50% increase over the past 2 months. Serious delinquencies are on the rise. More 50% past. I think we're still going to see that in July. All right. It's still going to get worse because of what's going on in the market. Now, looking at this right now, 7.76% month over month, 20% increase. We have 4.1 million homes, or at least 30 days or more behind. You look at number of properties, 90 more days behind. That's 631,000. That's why I'm saying we're going to have to see 4.8, 4.9, if not 5 million here, probably by the end of July. Now, you got to love this. Nevada, got to love Nevada. You guys are overachievers out there. Top 5 states by 6 months deterioration in non-current percentages. That means you've had the biggest deterioration. You're second highest behind Alaska and above California. 236% increase over the 6-month period than what you saw before. That's why I say Las Vegas is going to get hit hard. It's going to take a little while as people are going. Now, I would jump on a plane to go to Vegas. I would spend some, but not a lot of people would. Now, Vegas is also one of those states where it's got statewide moratoriums going on. That's why the numbers on the foreclosure side are basically nothing. Now, this map shows kind of the color code of what states are doing what. Dark green, it's current statewide moratoriums for a period of time. The lighter green, like California, has current local moratoriums. The very light green is states where evictions have resumed, and like Texas here, hey, it's just back to normal business. Nevada signed an order that allows residential summary evictions to resume for actions that do not include the non-payment of rent, drugs, stuff like that. A nuisance on July 1st, but evictions for non-payment of rent will resume September 1st. The order allows landlords and lenders to begin evictions actions of commercial tenants and mortgages beginning July 1st. So you've got some things going to happen. It all depends what's going to happen over the next couple of weeks. Now, obviously, most of the people that are out of work and things like that, they don't have to look till September. But you got to realize, hey, just doing that does kick the can down a little bit. It'll be interesting to see what happens here. Obviously, we're seeing a gradual return of foreclosure activities across the country. Vegas is about 7% of what it used to be. We're also seeing some serious delinquency states. Now, here's the thing. This map shows year over year. This is between 2019 to 2020. Numbers actually went down. That's not a surprise. Went down over last year. But when you start looking here, you can see other parts of the country are getting pretty red in other places. Vegas looks like it's still done pretty good. But this is really before, this was basically the first quarter. Things are going to get bad again for Vegas. We all know that we've heard talk about the dominoes falling, foreclosures, evictions, job losses are just going to increase, make it impossible for millions of people out there. Look, when you look at what mortgage products are failing and having a difficulty, here's where it kind of lies. The highest default rate right now is at FHA loans, 9.69. Who's an FHA buyer or mortgage borrower? That's somebody who's bought their first house usually. It's supposed to be 3.5% down payment and kind of get rocking on. Those are the people that have been the most affected with job loss. Oftentimes their budget mindset, they don't have a lot of savings. That's your first-time home buyer, usually $250,000 or less. Well, they're in default rate because a lot of the banks that were financing FHA products were allowed to gift the 3.5% down payment. They're also gifting closing costs. You get a lot of people giving in with 100% finance and nothing out of pocket. That's why it's a default rate. There's no investment on their part. When you compare it to the traditional conventional loans, it's a third less at 3.16 out there. So that's what I'm trying to get at. You're going to see a lot of these foreclosures in your newer build communities, your first-time home buyers. You know, you look at the other loans, the VA loans, 4.36 is still not quite as good as conventional, but then also your the other loans are at 4.36, the VAs are 4.65. When people are out of work and they can't pay for stuff, hey, am I going to pay for my mortgage, or am I going to pay to keep food and the power on? You know what's going to happen. Now, obviously, forbearance numbers continue to retreat a little bit on a month-by-month basis across the country as people are starting to go back to work. You know, we still see roughly around 4.6 million people in forbearance agreements. Now, they also estimate there's about another 4 million borrowers out there that haven't taken action, just haven't called. They don't know their options. They're not paying attention. They're too scared to call. We see that happen a lot. That's why we assume there's somewhere around 7 to 8 million really people in default right now that are in that 90-day or greater period that are struggling. Because, like I said, 1 out of 10 were in default or already struggling before this all happened. Now, is that good news or bad news? Well, for Nevada, Nevada has a higher than national average of the default rates. Okay, you have a longer FHA foreclosure timeframe, which is going to drag some things out when it comes to the FHA foreclosures. Nevada, you know, you got a non-judicial foreclosure, though, that's kind of longer than normal, 930 days, according to the FHA. Obviously, if it's a non-FHA loan, non-government-backed loan, you can foreclose faster. But the forbearance agreements that lenders are giving people, they're giving them 6 months. And they're willing to possibly give them another 6 months. And some of the banks will, depend on what's going on, because they know the banks aren't being hit that hard from the federal government. Anytime you have a big deficiency in defaults, the bank is supposed to be building reserves. Well, the federal government said, hey, you can lighten up on the reserves. The Fed said you don't need to have that much right now. You can build up on it and get to the point. But it's going to be a while before you see this foreclosure wave, if at all. 12, 18, 24 months. They're not expecting true foreclosures to really hit a lot of the markets across the country till well into next year. Now, if you're waiting on that aspect, okay, you're going to have to wait around for a while. You look at Vegas. Vegas is on the top 100 top metropolitan areas with 6.2% largest delinquency rates. Nevada was among the states with the biggest delinquency rates, climbing 5.5% to nearly 8%. Okay, New Jersey and New York followed. It's getting bad out there, and it's going to continue to get worse if things don't open up. What about commercial properties? You can see all over the place for sale, you know, for rent, businesses closing. I mean, you can look, drive right down the strip. You see Tropicana still not open. All right. Hotels, casinos are open, not open. Like I said, they expect 52% of small businesses to fail. And when you add in big clients, big tenants not paying their mortgage, or a lot of companies filing bankruptcy, it's going to get ugly. Now, I've been saying for about 2 years that the commercial market has been overpriced and was going to have to change. You can't keep things going up and up and up on the residential and the commercial side. Well, we all know that's going to change. That has changed. Now, looking across the country, the different asset classes, you see obviously lodging is in default. We know Vegas is one of the prime spots for hotels. Okay, the lodging and the entertainment industry obviously feeds a lot of that, and that stuff's closed. You've got defaults all across the board there. It could be ground zero for a lot of trouble. Retail, obviously, another big part of Las Vegas is retail. That's hurting. This is just giving you an idea. When you look at hotels are over 27% in default, and then you look at the retail is 14, 15 on this chart, but really closer to 20, 25. I mean, look at the 1 out of 2 malls are expecting to fail, and just a variety of things out there getting bad. Now, this didn't, talking about hotels, I didn't fall through, but there's a lot of, you're going to see a lot of hotels being sold. Oh, hang on here. Let me fix this really fast. Dang it all. I did not do this right. Fade in. Let me do this now. Okay, let's try this now. All right. 1 in 4 hotel loans are in default currently across the country. We kind of know that. 1 in 4 retail loans are in default. That's been on life support for a while anyway. You're seeing vacancy on commercial buildings set to increase to roughly around 20% nationwide. That number is getting worse in some places. Office space is obviously increasing. You're seeing vacancy rates for retail and restaurants at 15% or greater. That number is expected to climb into closer to 20%. A lot of restaurants in Vegas that are not open yet and still not returning back to normal, okay? You're expected to see rents and commercial rents to drop at least 10% by year end, and that number to increase to 15 to 20% going into next year. So if you're going to be a commercial investor and buy a property, you got to expect, oh, I'm not going to get rents of what they're at for the start of 2020. I got to expect 80, 85% of that, or maybe less, depending on who I can get into it, because there's going to be a lot of opportunity and people will have a lot of choices. Beautiful thing is you're going to have a glutton of inventory and quite a bit of stuff that the banks are going to need to move off their books. That you'll be getting substantial discounts that'll give you the flexibility to do that. Hotel transactions are down nearly 75% from last year. Okay, 75% from last year. Okay, you're going to see a lot of hotels. The Bellagio sold last year for $4.25 billion. That was basically what, a fourth, about 10%. We've seen more deals already this year than people have seen all the last year and a half. There we go, those numbers there. Other hotels across the country, Nashville's being hit hard, Orlando's being hit hard, San Diego's being hit hard, okay? A lot of stuff being cash purchases. What's that mean, cash purchases? A lot of times it's a debt being sold off the books, all right? A huge hotel in New York City is trying to be sold for less than 20 cents of what's owed on it, well below the value. You're going to see that specifically hit it in places things are closing. And that's the thing that they're saying. If you've got money, you can pick up something at deep discounts prior to their March evaluations for you. Commercial real estate, we know, has been hit across the board. $50 billion lost in market value in the first part of March. It's getting worse out there. The thing that's different about this time versus last time, in 2007 and 8, about 2/3 of all the distressed loans were financed by CMBS, commercial mortgage-backed securities, big funds, things like that. Well, this time around, the banks have gotten into it. The banks have financed roughly over half of the distressed debt stuff. Now, what that means for you guys is most of the time, right now, you haven't seen a lot of the commercial foreclosures hitting, but you will see here in the next couple months. Why is that? Well, banks have been taking the time to evaluate these commercial properties. And if they financed at 70%, somewhere between 60 and 70%, they want to stick at that LTV. And there are clauses inside the commercial loans that the value drops 20%, then the borrower needs to bring 20% to the cash to pay down that loan to stay at that 60, 70% LTV. But most people don't have that 20% down payment to stay in. And this is across the board on all asset classes. So then they'll start the foreclosure process. And you'll see, especially at the end of the fourth quarter, a tremendous amount of commercial properties in the foreclosure auction block. All right. It is sad, but the opportunity here is if you can step in with cash, whether it's yours or somebody else's or funds, and take over an asset, the best thing you do is start providing capital to buy out some of the bad loans or work with the current borrowers to try to reposition the property in a couple different ways. Now, if you pay attention to what's going on in the markets, Carl Icahn, who's a big commercial billionaire out there, he's been talking about this since March. Going to blow up. We're already starting to see that fuse get lit and things start to take off. Fireworks are starting to fly. He says it's going to be worse than the market collapse of 2008. This time around, though, the banks have gotten involved in it with the commercial side, and it's gotten a whole lot greedier. You have a bunch of mortgages, so the banks went out and loaned the money against a lot of shopping malls, office buildings, hotels, and retails. It's all credible institutions doing it all over again, and it's going to get ugly. Like I said, default rates are across the board. They're expecting banks to lose roughly $48 billion in commercial real estate loans across the country. Now, what's sad is the numbers are starting to shake loose a little bit of who's going to be, who's got the biggest piece of the pie. Bank of America came out just a few days ago and said that, hey, they expect to lose roughly billions of dollars. All right, they said setting aside billions for salaried loans, and their shares are dropping. Wells Fargo, Citibank, American Express. You know, a lot of people have some big stuff. This article talks about that Bank of America, which is obviously kind of the bell cow for the banking industry, is going to lose roughly $5.1 billion. Now, for them, they're one of the bigger banks. For us, when I see a number like that, I start to salivate. That's a lot of opportunity, $5.1 billion in debt. Now, Bank of America is not going to sell a one-off residential loan, but they're going to have plenty of commercial loans that they need to move, okay? And where are the opportunities? here's the thing. There are so many of them out there. If you're waiting for foreclosure and REOs, you're going to be waiting a while. I think we all know that. All right. If you're wanting to be in the fix and flip market, you're going to wait as well too. You're going to have to get really conservative on your flips because a lot of the lenders out there that were lending on fix and flips have stopped lending for a while. Okay. Rentals, I don't think I would be a landlord right now with evictions. Yes, it's in parts of the country they're letting you to start evicting right now. But that when a lot of people get evicted, that means it's difficult and people aren't willing to, they'd rather couch surf for a little while. And the thing here too, the rental side, so many investors have been burned on short-term rentals, Airbnbs, VRBOs, that they're now looking to sell that stuff versus being the short-term rental side. The real opportunities out there in the market these days are really in the debt game, the defaulted mortgage market. We're going to see residential notes, specifically in the fourth quarter, from banks that have a portfolio in different parts of the country that you can foreclose on, like if they lend in Vegas or if they lend in other states like in Texas, which has they're already starting the evictions and foreclosures up again here. You're not seeing it right now, but the fourth quarter has given the banks roughly 6 months to evaluate their portfolio, evaluate their book of business to see who the borrowers that are asking for forbearance agreements or are also probably high LTVs on their credit cards. They can pull and see exactly what kind of debt footprint that individual investor has. And those with a higher risk, those are the ones that are going to be looking to move off their books. Already seeing it, already getting phone calls from banks calling me, asking me if I want to buy some stuff. When the people have been with them for 20, 30 years as clients, but their risk goes above a little bit of what the bank is looking for. So you're going to see that in the fourth quarter. All right. If you know where to look, you're going to see commercial notes already are coming out this quarter. We have a lot of commercial debt. I have my Wall Street buddies, my people in California, New York, Florida are telling me already they're seeing more deals now than they saw all of last year. And it's just a matter of basically cherry picking and basically making sure you got your due diligence down or being flexible in what you do with the asset. Like investor did in Arlington, Illinois. They took this newly built hotel, doors opened in February, and they stayed open with nobody showing up in March, April, with everything happening. What did they do? They got smart and converted it to an apartment complex and sold it as an apartment complex. Smart. Our buddy Garrison Gilbert is an investor buddy of mine out in Maryland. He's doing the same thing in Gettysburg, Pennsylvania, taking a 55-room hotel, a non-flagged hotel, and turning it into an apartment complex. Most of it's already set up. You don't have to do much rehab. It's already set up basically to be a pretty easy 2-bedroom apartment for things. Or I've got another, this is a deal that I'm actually looking on right now for my own self. This is a property in Denver, downtown, 170 unit office building, okay? 7 covered parking spots. It was office space, basically vacant. All right. But you know what the owner did? He converted it to a self-storage facility. And it's already 10 by 10 units. Let's turn it into a 170 unit self-storage facility. And that's a smart place because self-storage is one of the lowest non-performers. There's a lot of opportunity there. Okay. Brilliant strategy in a prime part of downtown and absolutely looking at this, loving the idea that we're looking at this number on here. So all my guys in Wall Street, all my other people are telling me, hey, listen, stay out of the $5 million range. The big commercial deals, the $5 million and above, they're going to get gobbled up by bigger banks. They're going to get swapped around. You're not going to even see them. Okay. But you will see a huge amount of loans that were financed and properties financed by the banks below $5 million, specifically in that $2.5 million range or below. That is where the deals are at. And there's a lot of retail, office space, medical office, apartments, things like that you can pick up. And if you can buy it cheap enough, which you should be able to, it gives you a lot of flexibility to be the bank to work it out and be flexible with the tenants or the borrowers. Every bank that we have looked at has had at least 50% or 75% of the distressed stuff is in the commercial stuff. Usually they'll see somewhere between 25 and 40% in the residential side default, depending on the bank, but every bank has got this stuff. Why? As an ex-banker, this is what they taught you to go look for. This is what they get excited about. All right. But this is also the asset class. When they get greedy, it's also the first asset class that struggles. And there's a lot of banks in trouble out there. Now, one of the things that we track is a Bauer Financial report. Bauer Financial tracks the quarterly reports of the banks, what they have for default, how much in 90 days, how much in 30 to 89 days, what's in commercial, residential, multifamily loans, right? And I like to, with what I'm doing this tour is, okay, let me look at what banks are lending or based in the state. We all know Vegas is loved by a lot of banks, okay? But surprisingly enough, on the Bauer Financial list, there's really only one bank who's based out of Nevada. Yes, I know a lot of them have offices there, but the main corporate office is Beal Bank USA, based in Nevada. And so, like, okay, well, other states like Texas had it on 28. Seattle had like 40 up in the neck of the woods. It was a little bit of a weird thing. But I looked at it and I was like, oh my gosh, this bank is really in trouble. They have 23 branches in around Las Vegas, Nevada, and their portfolio is not doing very good. They don't have a 5-star rating. They have a 3-star rating. Yeah, a 3-star rating is not good. You want to have a 5-star rating. There are some banks on this list, 0, 1, 2, 3, some different ratings out there, okay? They have roughly just under 60% of their entire portfolio is 90 days in default. Yeah, they're a Nevada-based bank. I'm sorry, not branch. 60% of their portfolio is 90 days or greater in default, okay? They have $92 million alone in single-family loans, okay? And roughly about $100 million in commercial loans that are in default. These guys are not excited right now, okay? They are not excited at all because of what's going on in the market. If this continues to drag out, they're going to be dramatically impacted and have to make some things happen because they've got another $90 million that is roughly in that 30 to 89 day period, and is every day that goes by higher percentages. I'll be interested to see what the next quarter report says about Beal Bank. Okay. Now, why buy the distressed debt? Why would I want to do that? Because guys, you can start buying that debt now and start playing versus waiting around 6 to 12 months. Heck, a lot of the deals that we buy never end up going to foreclosure because we step in, buy it cheap enough, work it out with the borrowers, turn it into a great performing asset, or have a workout situation. Never ends up at the foreclosure auction. Those that are chasing foreclosures are at the bottom of the stream. You're at the end of the line. In today's world, you want to be as close to the source as possible. This is what's so great about buying distressed debt. You buy a significant discount, and depending on the location, the foreclosure time frame, values, condition, what's going on with the bank, what's going on with that asset class, you can often pick up a lot of stuff relatively cheap. Buy the debt and control the asset for huge discounts, somewhere between 30 and 70% off of what's owed or the value. All right, already seeing assets substantially discounted out there. And your strategy isn't to try to take the property back. It should be to try to get reinstated or a modification, okay, or short sale, short payoff, foreclosures, loan sales, deed loan cash keys. There are a whole variety of strategies you can do on the residential commercial side. Right, if you're worried about the borrowers filing bankruptcy, that actually works in our favor because they got to come up with a payment plan. With commercial notes, you have the right to collect rents. Yeah, that's right. If the borrowers or the tenants are paying the borrower, paying the landlord, but the landlord's not paying the mortgage, guess what? You get to step in and collect the rents being the bank. Done that multiple times on different deals out there. You take over the note and turn it into cash flow performing notes, whatever you want to do, or take it over the property and do what you want with it. Keep it, tweak it, reallocate it, pivot it, whatever you want to do. There's a variety of things that you can make happen. Now, other advantages to investing, I know people are struggling out there financially. They're not sending out, they don't have a lot of extra income. And like I said, I don't care what your situation is, you can dive into the note business because we don't send out direct mail. We're not dropping thousands of dollars a month on postcards or yellow letters or bandit signs, hoping to get one person who's distressed to call us to work with us. We reach out via email, LinkedIn, or pick up the phone and dial off the reports that we see to get a bank to send us lists on a regular basis. That list might be one asset, or it might be 10 assets or 1,000 assets. There is a lot about the beauty of this is that I've been getting lists from banks every quarter for the last 10 years. And you know what? I didn't send a single postcard. Okay, I don't do that. Don't have to. I'd rather identify those that are in trouble, call the banks send me the list of what they want to move, which is a lot, and then I work it out. I can share, one source leads to regular deals, not one property. I don't have to drop 5,000 in postcards again next month. Try to find more deals. No. One source leads to regular deal flow, and I can pick the best deals. I don't have to buy it all. They send me a list. I can cherry pick it. Pick the best ones I want for my portfolio. Make an offer. If they don't want it, guess what? I'll follow back up in 30, 60, 90 days. And as we get closer to the fourth quarter, the banks are getting a whole lot more motivated to do some things. Okay? If you want to buy in bulk, yes, you can buy in bulk at a better pricing. Okay? That's known. But I don't care if you're looking at residential, commercial assets, you will see it from the banks. Now, a lot of times the banks will have separate asset managers that are handling residential, commercial. You're not going to buy a one-off note from Bank of America Chase, but a lot of these other smaller banks will have stuff in their books they're looking to move. Okay? You can raise capital from other investors to fund your purchase. You don't have to use your own money. Or if you don't have funds to fund stuff with, go out and raise some capital. Or you know what? Better yet, wholesale the deal. Find the deal, negotiate it, and flip it to other investors out there to make some money. Yes, you can wholesale notes like you can wholesale property. Okay? Guys, there was 15 million homeowners underwater in 2010. We're going to see that number again. We're going to see millions of commercial properties in default. Already starting to see that. The choice is how big of a piece of that pie or how big a piece of that crumbs that are going to fall from the big guys do you want to gobble up? Because there's plenty of opportunity out there. And yes, everybody, there are plenty of investors out there to fund your deals. Across the country, there's over $9 trillion in retirement funds sitting out there in 401ks and IRAs, not making much at all. Heck, in in Las Vegas, your county alone, there's 11,000 investors with an IRA in your area right now. Yes, 11,000 of them. Some of you guys that are on this, we were able to pull that information and send it out. Out of the 8,000 of them have at least 150K or more in their accounts. What? Yes. 8,000 of the 11,000 have at least 150,000 or more in their accounts. Now, how many people do you need to reach out to put $1 million together or put $2 million together? 7, 10, 1? If you get the right deals, good deals find money, and that's always been the case. All right? Worst case, you can't do it. You know what? There are plenty of real estate investors in Nevada and Las Vegas as well. There are 12,000 real estate investors, that's what they call themselves, in Las Vegas alone. Not to mention the thousands and thousands of other investors that love Sin City. Be a deal engineer. Find a deal, find an investor, put a deal, take your piece out of the middle. Done that for years. That's how I got started back in 2008, 9, and 10. I didn't have a lot of my own fund, but I could go find a deal, and then I would find an investor to fund the deal. And it's easier than it ever was before to find investors out there. So the question I ask is, do you want to be the banker or the borrower? All of us are in the paper game. Whether you've got a house payment, auto loan, credit cards, medical bills, you owe Guido down the road for your betting bill. You've got money going out. All right, you're just on the wrong side of the payment stream. You want to be on the bank where the payment streams are coming in. And banks don't get into fix and flips. They don't get into the short-term rental game. They're in the paper game. They're in the mortgage business. They're in the notes. They're in the lending business because that's where all the money is made. And you have an opportunity right now to get into that side, to make big changes, not only for your life, but also for your future. You could build something amazing right now and really go out and change lives, including your own. I'll tell you right now, whether you believe it or not, the bank always wins. The bank is always going to win. And it is, the pen is mightier than the hammer for sure. So how do you tap into the tsunami, guys? Well, we have been helping teach real estate investors like yourselves for over 10 years on how to buy distressed debt. That's why they call me the note guy. I've bought over, like I said, bought over $500 million in commercial and residential debt. I've helped thousands of investors buy their first non-performing note, whether it was residential, commercial deals. The way that we teach, we keep it simple. And yes, you can buy direct from banks. I've got thousands and thousands of deals that prove that banks will sell to you on a one-off basis. And even if you're brand new at this, okay? Whether you're looking for cash flow or asset growth, looking to build wealth or add more deals to your portfolio on a one-off or bulk basis, you can do this, everybody. And there are trades that we see from 25 grand at our smallest trade to 5 million plus. Bought anywhere from one deal for $7 all the way up to 184 assets in one trade. You can do a variety of great things out there. We're about to have an amazing amount of deals at the market. You just got to prepare yourselves. And like I said, I don't care. You don't care what your credit is. The banks aren't asking for your FICO score. They're not running credit on you. They don't care if it's money. They don't care where the money comes from as long as you're funded. They're literally saying, buy something, buy anything. Please buy something from us. And the beautiful thing, guys, like I said, don't have to have a lot of experience. If you can jump online, send some emails from a professional email, you make some phone calls, you can put your LinkedIn profile together, it looks professional, I can help you find deals today. Okay. And I don't care, like I said, whatever your focus is, single family homes, apartments, hotels, retail office, self-storage, mobile home parks, residential living, whatever it is, there are deals in all asset classes. And you can really create win-win stories, not only wins for you and your investors and your family, but also wins for the banks, but also wins for the borrowers in trouble. There's a lot of good people that are hurting right now that they didn't do anything bad. The market just sucked. Okay. Damn Corona. Damn Mexican beer. Okay. You got to realize is that a lot of borrowers are like this family in this house here, where they've lived in their house for many years. They took out, did a refinance or pulled some equity out, and then the market tanked on them. And then they got sick. And with this one borrower, we looked at the portfolio that it was part of, looked at the loan file, and realized that this borrower had been trying to do a loan mod for 4 years. Now, hopefully we don't see that where it takes 4 years to get a loan mod these days, but I'm willing to bet it's going to take some time. Her loan had been sold 3 or 4 times. When we bought it, I called her immediately, one of the few times I do make actual phone calls, and negotiated a payment plan with her that made sense for both parties in 30 minutes. To the point now that we erased roughly about 23 years of mortgage debt. She has the house paid off, had the house paid off in 7 years instead of 30. I made great return on my investment, got all my money back, and when I paid for the mortgage in the first year, nothing but pure profits, years 2 through 6. Okay. And now she's got to be able to stay in the house. And like I said, that's a great story. You can buy cheap assets. There's a lot of property. It's cheap outside of Las Vegas and other markets. You can go high end too. Hey, high end condos. Those aren't going to be your traditional single family homes. Those aren't financed the same as if somebody's buying a single family home. Okay. This is a 3-unit that we bought from the Bank of Arizona back a few years back. Bought the note cheap enough, got the borrower to sign the property over, deeded it over to them. We turned around and sold the property, made a nice profit on it. Right on the beach. Okay. Or maybe you're looking more multifamily side. You're going to see a lot of the smaller multifamily struggle. Or as the values drop in a specific area, the evictions go up, the values drop and the banks will call those loans due. We saw that beforehand. We're going to see it again from everybody. Like our first commercial deals were 8-unit, 20-unit, 75-unit, 25-unit, and 19-unit apartments that we ended up buying the note at least 50 cents of the dollar or less, or flipped it. This one I actually flipped in less than 24 hours once the bank reached out and we finalized the number. Got under contract for $375, flipped it for $415, and made 35 grand. For a lot of people, 35 grand is almost what they'd make in a year. What's it going to take for you guys in one deal? It could be life-changing for you. The deals are out there, everybody. The deals are out there. You just got to do it. And I don't care if you want to do it big or do it small. Most people start off small, buy an asset here or there, just kind of like our buddy Gene. He was buying an individual asset here or there with what funds they had. And when we met him, we said, you can do a lot better. You can do a lot bigger. And he's like, really? Took a little while, but over a period of 2 years, he started really to take our training and really dove into the market to the point where Gene sent me a text message about a month ago, maybe 3 weeks ago, talking about how he just closed on his 134th, 135th asset. There's over $13 million in other people's money that he's raised from doing the market that we teach. Bought the deals by finding deals the way we teach people to go out and find deals direct from banks. And I love the fact that he's going to be making 7 figures, last year and then into this year. He's excited about what the market holds, and he's no longer working at a hot shot driver where he's driving all the way across at night. He's working from home, enjoying what he does, and making money. This might be the one photo you see with him without a hat on. You'd be like Laura Blanc. So many real estate investors are going to investment clubs and networking and taking classes and trying to make something happen. Okay. She was just like that here in Austin, trying to wholesale, trying to do some fix and flips, light rehabs, trying to make some things happen. And in a competitive market where you don't have a big marketing budget, you get outbid pretty fast on things. Well, she learned to know business from us and had done a great job. Closed on 14 or 15 assets in her first 18 months. And fast forward about she's closed on over 100 deals now and is in the process of closing on a large trade of over 100 performing notes that she's picking up at like 53 cents on the dollar. Yeah, a $4 million trade that returned her a nice, about a 20 to 30% cash on cash return. Not a bad day for somebody who was having struggled to begin with a couple years back. Life-changing. Okay? Life-changing. Just like Keith Collins. We've helped Keith and his family do an amazing job. Keith lives in Ohio. Mason, Ohio, just outside of Cincinnati, if I'm correct. think he was a small town mayor. Done a lot of real estate here and there, dabbled, done a lot of other things, worked with cities. I think he put in water treatment plants for a few years. But once he learned the note business a few years back, he went head first into it. Dabbled with it a little bit, got his foot wet, applied what we taught, and I'm excited that him and his wife made 7 figures last year as well from what we taught him. Got an email from him, hey, this is great. Love what you taught me. We're going to make 7 figures in 2019 from what you taught us. And I love stories like that. I love to help people. You can do the same thing too. And if you have no experience, these all had some real estate experience when they got started. That's great. It's a benefit. But if you don't flip out. If you don't have money, don't flip out. All right, you'd be like Roth. Roth from San Diego, small business owner there, runs a car detailing business, or did run a car detailing business. When you can't drive anywhere, nobody wants to get their cars washed. So between March and last month, he basically had to let go his entire staff of 15 employees. Now he started to learn the note business, doesn't even own a house. Okay, got started, took our training, and in the first 30 days bought 2 notes. He had a little bit of money saved, so he bought 2 notes with his funds, got those reperforming at roughly a 20% return to him, so excited for him. Then he bought another 3 deals with other people's money. He's raised about 150 grand from just talking and communicating, sharing what he's got going on with his warm market. Well, out of those 2 deals, he's going to flip them. I think he's got them both sold. 2 out of the 3 sold to make a good 20-30% return on his money, and then the 5th one he's still working out. But if he didn't have the note business, he would be flat on his ass. Those are his words, not mine. And we're proud of what he has done, and we are so looking forward to his future because he's excited when he could be down in the dumps like many people out there. A lot of small business owners are looking for some opportunity, and this is the opportunity for most of them. It's not a get rich quick. I will tell you that right now. It takes work. You got to do the right things. Sometimes it takes 30, 60, 90 days to get some deals in, to figure out, to work them back and forth. Sometimes they drag out. We've had people buy notes within a week. We've had people buy within a month. Sometimes it took a year. It all depends on where you put the work in, how many hours you can put to this. Now, we have people that are doing this successfully 10 hours a week. They're doing it as a side hustle. Most of them have started off as a side hustle while they work their job. And if you want to do it, hey, great, we'd love to help you. Like the other thousands of investors that we have helped over the last 10 years. We have done an amazing job teaching people how to really buy notes from banks at big discounts. And yes, banks will sell to you. There are people up there say, the bank won't sell to you, you're too small. Well, that's not true. All right, I can show you NDA after NDA after NDA from banks that we've bought from. And we're signing more every day as this market continues to get worse. And I would love for you guys to be one of those 1,000 people that we set a goal to help in the next 12 months. Because, hey, if you want to do this, we can help you out do this. We can help you stick your foot in the water and figure out if this is going to be for you or if it's not for you. How do you do that? Well, you know what? You take our note weekend training. It's basically our online training. We teach this basically every 3rd Saturday of the month. It is a 1-day with yours truly teaching basically the ins and outs of note investing, how to really make money in the note business, how to find, fund, and flip with none of your own money or none of your own credit and no experience as well. We live stream this on Saturday. We record it. So if you can't make it all on Saturday, guess what? You can watch the replays on Sunday. And then ask me questions too if you miss out. That's the beautiful thing. Our students have taken this. They call this, Scott, this is really good. The Cliff Notes version of note investing. They love it. It's a good refresher. It's also a really great starting point for most people out there that are trying to figure out, hey, is note investing for me or is it not? Normally $99. We dropped the price in half to $49. It runs from 9 a.m. to roughly 3 or 4 or 5 o'clock in the afternoon, depending on how many questions and how big a class it is. Our next class is just around the corner. Just a couple days. The next one, you can't make that one. Guess what? Sign up for the one in August. Sign up for the one in September. But take advantage of that $49 price right now. If that's not good enough, let me tell you what we teach in there, okay? The first part of the day, we show you how to find notes. We'll literally show you how you can walk away from the class with over 2,000 banks that you can reach out to start having them send notes to you. If you do, the scripts, what to say, what not to say. We'll talk to you and show you how to find investors in your market to fund these deals and what not to say. We'll also discuss the different exit strategies and how to make money when you find something, whether it's wholesaling it or taking down the deal for yourself, or using one of at least 10 different exit strategies. We'll also talk about the different vendors because a lot of people are scared, like, do I have to talk to the borrowers? What am I going to say? What am I going to do? No. There are vendors and servicing companies out there to help you when you take these deals down, okay? And there's you know what? If you don't want to call banks, there's a variety of loan trading platforms out there that have deals that you can look at today. That's right. You ain't got to wait 6 months. You can wait 30 days. You can start looking at deals in day one, residential and commercial deals, and we'll go through those as well. And we'll cover a whole lot more throughout the day. You know, you're not going to learn everything about the note business in one day. You're not going to learn everything about the note business in 3 days. But I give people the opportunity to stick your foot in the water, get a good fit for this. And if you want to advance to the next level, great. We'll apply that $49 to one of our 3-day workshops. And no, this is not a pitch fest. It's not me just telling you 5 cents and then you in a hard, heavy pitch the rest of the time. I don't believe in that. I believe in giving you content that you can use and walk away with. I was fortunate enough years ago to have a mentor that really taught me the amazing things. And I always promised that if I could pass that on to people, that's what I would do. You can check out the full itinerary, the full schedule, basically, broken down half hour by going to noteweekend.com. That's where you'll get signed up for the class as well. And just for $49. And if that's not enough, we're going to cover, guys, we're going to throw in $1,000 in bonuses as well for you. 1 week training, note weekend training, normally $99. We'll drop it down to $49. We'll throw in my calling bank training. This is a 4-hour period live training class during the day, in the middle of the week, where I'm calling banks for 4 hours. You actually hear the phone calls, hear the conversation, see who I call, see how I track people down, see how I'm able to get people to call me back and how to make those relationships. And most people, they love this because they see it's not nearly as hard as you would think it is to be. And people on the other end are usually pretty glad to talk to you. Okay? That's normally $49. We throw that in. Yes, that's recorded. If you can't attend, you can watch or listen to the whole thing as well. We'll give you the most recent Bauer financial list. That alone would cost you $360 to go order it yourself. Might as well just sign up to get that. Hell, that's a heck of a bargain there for you. Okay? After the class, we always like to sit down and talk with people for at least 30 minutes. I charge $1,000 per hour for consultations. I'll give you a 30-minute phone call to help direct you in the right spot, in the right direction. Make sure you're a right fit for this. Help you avoid making some mistakes and get you off and rock and rolling. People always ask, well, Scott, are the replays included? Yes, the replays are included. Yes, you can bring your spouse or a business partner. Just let me know their contact information. We'll be glad to get them a link to it as well. That's included. And then, of course, we've got an amazing Facebook group with about 900 other note investors out there that you can network with, flip deals to, raise capital. That's included. All right. Plus, we throw in a 20-plus page manual along the way as well for you. So it's over $1,000 in bonuses, everybody. Okay, over $1,000 in bonuses, and that's just for $49. Not monthly, one-time fee of $49. And we'd love for you to be a part of that training. So why should you do this? Well, look, guys and gals, if you want to help borrowers and investors and make some money along the way for yourself, that's why you should do it. If you're looking to help the solve problems and make America great again, one defaulted mortgage borrower at a time, that's why you should do it. But more importantly, this is the opportunity to build wealth and change the direction of where you and your family are going, where the country's going. You could be one of those few out there that sees an opportunity and makes some really great tasting lemonade out of a lot of lemons. You can make a lot of opportunities happen for because they're sitting out there and the banks are waiting for you to pick up the phone. There are investors out there waiting for you to pick up the phone and give them a phone call or reach out to them because they've got money burned a hole in their pocket and they need to invest in something. All right. And here's another final thing. We all know distressed borrowers. We all know distressed property owners. You might as well tell them what their options are or maybe potentially reach out and help them as well. Because like I said at the beginning, there is nothing greater than helping someone overcome an obstacle or achieve a goal or dream that they thought was impossible. There's 40 million Americans out there right now struggling to provide ends meet. 1 out of 9 people are in default. 1 out of 12 are in serious default. Half the business owners are going to fail. If you fall into one of those categories, this might be for you. It's not for everybody. You got to put some work in. You got to be coachable. But if you're coachable and you're hungry, I can show you the way to success, like I've shown so many others in a variety of ways. So I would love for you guys to be a part of it. Go to Note Weekend. Sign up now. Go to noteweekend.com. Take advantage of this, guys. If at the first hour, halfway through the day, like, Scott, this isn't for me, guess what? No problem. I'll refund back the $49. I'm not doing that to make money. I want to find people that are hungry and put 1,000 people in that I can send deals to, that can buy deals that will, as they find lists, they'll send them to me too. It's a win-win. If you want to make money, I can help you do that. with Note Weekend. You might as well make money in the note business because a lot of other people are. And if you don't take advantage of it now, you don't want to be here 6, 8, 10 years from now. So, man, I wish I'd done this sooner. Because that's the number one regret I have, is that I didn't buy more back then. I wish I bought a whole lot more. And everybody will tell you that same thing too. I wish I bought more when it was cheap. And this is an opportunity for all of you. So, noteweekend.com. Get signed up there. It's spelled exactly as it sounds. Love for you to be a part of it. $49. Get signed up today, and we can see you this Saturday. Any questions, comments? Got a couple comments. Let's see here. Great. Jeff asked, where did I get that moratorium on foreclosures interactive map? That's a secret. Come to the class, and you'll get a copy of it. Where did I get that? I believe I got that from either from one of my buddies on Wall Street, or I had Darren Blumquist from, actually it was Darren Blumquist from auction.com sent me that list, Jeff. So I've been seeing a lot of charts out there, and you're only seeing a fraction of them because I don't want to be here all night long. An hour is long enough for you guys. But literally, guys, I'd love for you to be a part of it. Sign up tonight, noteweekend.com. Trust me, you'll love it. It's intense. We usually only take like a couple breaks throughout it because I really want to drive information home to you. Like I said, 9 a.m. Central Standard Time was at 7 a.m. Vegas time. Get started early, be done by 2, 3 o'clock in the afternoon your time, and be off and running for Saturday night. So, any other questions, comments, concerns? I want to thank you guys for joining in, being a part of this tonight. Thank you so much for asking questions. Thank you so much for listening in, and I hopefully will see you this Saturday. If you have any questions, don't hesitate to reach out to me at talkwithscottcarson.com, and we'll see you all at the top, everybody.